Welcome to today's video. If you're wondering whether it's the right time to buy, sell, or hold MicroStrategy NASDAQ MSTR stock, you're in the right place. In this detailed breakdown, we'll analyze MicroStrategy's recent stock performance, expert price predictions, financial health, and what institutional investors are doing. By the end of this video, you'll have a clearer picture of whether you should consider making a move on MSTR stock. So, stay tuned and let's dive deep into the latest trends. To start off, let's look at how MicroStrategy's stock has been performing. On Friday, the company's shares saw a decline of 1.4%, reaching an intraday low of $317.81 before slightly recovering to close at $319.28. If we compare this to the previous closing price of $323.92, it's evident that the stock faced some downward pressure. One of the key factors behind this drop is a significant decline in trading volume. Only 3.65 million shares were traded on this day, which is approximately 77% lower than the company's daily average volume of 16.2 million shares. This suggests that investor interest may be cooling off, at least in the short term. However, is this just a temporary pullback, or does it indicate a larger trend? Let's explore further. Next, let's talk about expert opinions. Analysts have been actively adjusting their price targets for MicroStrategy, and there's a mixed sentiment in the market. Maxim Group has recently raised its target price from $480 to $500 while maintaining a buy rating. This indicates their confidence in the stock's long-term potential. BTIG Research also increased their target price significantly from $290 to $570, reinforcing their bullish stance on MicroStrategy. Canaccord Genuity Group, however, decided to lower their price target from $510 to $409 while still keeping a buy rating, suggesting that they see growth but with some short-term risks. TD Cowen remains optimistic, increasing their price target from $392 to $525 and reaffirming a buy recommendation. Barclays, on the other hand, has revised its target price downward from $515 to $421 but maintains an overweight rating, which means they still believe in the company's strong fundamentals. Overall, out of the analysts covering MicroStrategy, only one has given it a sell rating, while 9 analysts are recommending a buy, and one has gone as far as to rate it a strong buy. According to MarketBeat's data, the stock currently holds a consensus rating of moderate buy with an average price target of around $536.90. So, what does this mean for investors? Analysts seem to agree that MicroStrategy has the potential to rise, but there is some caution in the short term. If you're considering buying or selling, it's important to understand the company's financials, which we'll cover next. Now, let's examine MicroStrategy's overall financial health and key stock metrics. The company's stock has been fluctuating between a 50-day moving average price of $342.30 and a 200-day moving average of $268. This suggests that while the stock has been on an uptrend over the last several months, it's facing some resistance at the current levels. MicroStrategy's financial ratios paint an interesting picture. Current ratio 0.71. Quick ratio 0.65. Debt to equity ratio 0.39. These figures indicate that while the company does have liquidity concerns, it is not overly reliant on debt. However, one of the most concerning aspects is its market capitalization of $71.82 billion with a negative price-to-earnings PE ratio of -53.20. This negative PE ratio suggests that the company is not currently profitable, which could be a red flag for some investors. Moreover, MicroStrategy has a beta of 3.25, meaning that it is significantly more volatile than the overall market. If you're an investor who prefers stability, this might not be the best option for you. However, if you thrive on volatility and are looking for high-reward opportunities, this stock might be worth a closer look. A deeper look into MicroStrategy's earnings report reveals some key takeaways. The company released its latest earnings data on February 5th, reporting an earnings per share EPS of -$3.20. This was far worse than analysts' expectations, which estimated a loss of only 13 cents per share. That's a significant miss of $3.07 per share. The company's return on equity ROE stands at -19.01%, and its net margin is currently -251.73%. These numbers indicate that MicroStrategy is currently unprofitable and struggling to manage its expenses effectively. This raises concerns about the company's ability to turn things around in the near future. Despite the financial struggles, institutional investors have continued to show interest in MicroStrategy. Let's break down some recent activity. Quadrant Capital Group LLC increased its stake in MicroStrategy by a whopping 855.6% in the fourth quarter. The firm now owns 86 shares, valued at $25,000, after purchasing an additional 77 shares. Riverview Trust Co. has acquired a new position in MicroStrategy, valued at $25,000. IG Wealth Partners LLC also joined the list of new investors, acquiring shares worth $25,000. Dunhill Financial LLC and Safe Harbor Fiduciary LLC have both made new investments in the company, signaling growing interest from financial institutions. Currently, around 59.84% of MicroStrategy's stock is owned by institutional investors and hedge funds. This indicates that large investment firms still have confidence in the company despite its current financial struggles. Now comes the big question: what should you do with MicroStrategy stock? If you're a long-term investor, the stock's future potential may outweigh its current financial challenges. Analysts have set high price targets, and institutional investors are showing faith in the company. If you're a short-term trader, be cautious. The stock is highly volatile, and recent earnings reports indicate financial struggles that could put pressure on the share price in the near term. If you already own MSTR stock, it might be worth holding onto it unless significant negative news emerges. The company has a strong brand and backing from institutional investors in it, but there's no denying its current challenges. To wrap things up, MicroStrategy is a company with both risks and rewards. While analysts remain largely optimistic and price targets indicate potential upside, the company's financial health and profitability concerns cannot be ignored. If you found this analysis helpful, make sure to like, subscribe, and hit that notification bell so you don't miss any of our latest stock market insights. Drop a comment below and let us know your thoughts. Are you buying, selling, or holding MSTR stock? We'd love to hear your opinion. Thanks for watching, and we'll see you in the next video.